I'm Bonnie Glaser, Managing Director of the Indo-Pacific Program at the German Marshall Fund of the United States. Welcome to the China Global Podcast. Today's episode is the third in a series of three that examine the potential consequences for China if a military operation against Taiwan were to fail. In each of these episodes, we're speaking with authors of a recently published German Marshall Fund study of the possible costs that China would incur across four different but interrelated areas: the Chinese economy, the military, Chinese social stability, and the international costs. The report is titled "If China Attacks Taiwan," and it is posted on gmfus.org. Our podcast today focuses on the potential costs for the Chinese economy. To just recap quickly, the study considered two scenarios that could take place in the next 5 years. In the first scenario, a minor skirmish escalates into a multi-week maritime blockade of Taiwan by China. Although several dozen members of the Chinese and Taiwanese militaries are killed, U.S. intervention eventually forces China to de-escalate. So this is a very short, minor scenario on the spectrum of the possible scenarios that could occur. The second scenario posits a conflict that escalates into a full-fledged invasion, with Chinese strikes on not only Taiwan, but also U.S. forces in Japan and Guam. After several months of heavy fighting, Chinese forces are degraded and eventually withdraw after suffering many tens of thousands of casualties. My guests today are Charlie Vest and Logan Wright, who co-authored the really outstanding chapter on the implications for the Chinese economy of a failed operation against Taiwan. Logan is a partner at the Rhodium Group. He leads the firm's work on China's economy and its global impact. Charlie is an associate director also at the Rhodium Group, where he manages corporate research and advisory work on China. Welcome to the China Global Podcast.
Thanks, Bonnie. Pleasure to be here. Thank you very much for inviting us.
Thanks, Bonnie.
So let me start with a general question. What are the main conclusions that you hope readers will take away from your short paper?
Sure thing. I think that it's underappreciated that while China's ambitions toward Taiwan, their military objectives, their longer-term political objectives for reunification are longer-lasting phenomena that have extended for decades, the economic reality in which those political objectives are going to be potentially being tested is very different for China. So in the last 4 to 5 years, you've seen the Chinese economy increasingly dependent upon open global markets and export-led growth because of the collapse of the domestic property sector and the weakness of domestic infrastructure investment. And that structure in which China needs global markets to remain open and that the world can no longer depend as much on China's domestic demand to anchor a stable global trading relationship means that China has these limits to how far they can actually push political adventurism, military adventurism, not only in Taiwan, but elsewhere, and how, effectively they can threaten to escalate conflict. And so when thinking about the scenarios you propose, sort of the minor conflict and the major war scenarios, in the event of a major war where China is committed to taking on certain economic costs, these considerations that we advance in our paper probably aren't as directly relevant to Beijing's decision-making. But that's probably not what the world is most worried about. The world is probably most concerned about intermediate type gray zone actions that have incremental costs in which Beijing likely needs to reassure the rest of the world very quickly that conditions are going back to normal, because if they do not do so, it accelerates global trade restrictions on China's exports. It accelerates de-risking and a movement of global supply chains away from China. And we can talk all about how difficult that is and how that process is, has tons of friction attached to it. There's a lot of cost associated with that. But the basic dynamic is that Beijing has a different problem on its hands in communicating to the rest of the world a certain stability in future economic conditions, even while it would be trying to make political points vis-a-vis Taiwan in using gray zone military actions to either change the political relationship in Taiwan or to push back against perceived, the threat of perceived foreign intervention in such a crisis as well.
So this is related to what you call in your paper the escalation dilemma that China faces. And can you maybe talk a bit about how that would actually factor into China's decision making and whether it would use force or how it might use force against Taiwan?
Sure. And this is again related to if we assume that Beijing is committed to military action, maybe these considerations aren't as pressing. But most likely, they will be taking action. The more likely scenarios are something in the next couple of years where related to the Taiwanese election or other sorts of actions by a DPP government where China feels the need to send some signal to Taiwan and wants to use military force to do so, and therefore has to create the prospect that they could escalate military force in the future. If you look at what their options are in doing that, they basically need to create conditions in which they deliver sort of fait accompli. We've taken this action and it can't be reversed, or we're not going to reverse it because of the economic consequences of potential restrictions on trade, potential changes in investment. If they're just trying to send a political signal, it's very difficult for Beijing to say out of one side of the government, we are committed to this military action and we want to see X or Y change in what Taiwan, US, other allies are doing vis-a-vis Taiwan, and therefore we're raising credible threats. And on the other side of the government, they have to be saying China is still a safe place to trade, China is still a safe place to invest, and that these conditions will stabilize very quickly. And that's what we call the escalation dilemma. It's one thing to escalate. It's one thing to take a very aggressive action and saying to the world, we don't really care about the economic consequences. But that is a much sharper choice for China at present than it was even 5 years ago, because of how much more dependent on external demand and global markets for China's exports staying open. The nature of the economic structure, which is really more of our expertise at Rhodium than the security dimensions here, are pretty critical. China is the world's largest source of global investment, meaning investment as a proportion of global GDP. And so if China is an investment-led economy, the only way it can continue to grow as a proportion of the global economy is by continuing to invest elsewhere, which requires basically displacing other countries' investment if they're not actually generating enough demand domestically. And that requires those export markets being open. And that requires countries still being willing to trade with China despite some of the military actions that they are taking. There are certainly some countries that, even as we've seen with the Russia case, that even if there was Chinese action toward Taiwan, it wouldn't change their trading relationship with Beijing. But for many others, including the critical sources of global demand in the US and the EU, it likely would. And so that is the dilemma that Beijing faces. They have to send two different types of political signals. And in our opinion, in the paper, it really does limit in these intermediate gray zone scenarios how forceful they can be and how long they can push certain military options. And ironically, one of the implications that we point to is that it may be in the US or allied interests to try, ironically, to extend some of these gray zone scenarios, to prolong them, to force this conflict back into Beijing's backyard, to make them think harder about what options they have.
I want to unpack a little each of the scenarios, and we'll start with the minor conflict. And you had some really interesting observations in your paper about the potential economic costs in a limited conflict. And you stated they will not necessarily accrue linearly, and noted that there's an inflection point at which costs begin to sharply increase. So please help us understand that.
Thanks, Bonnie. Yeah. One of the key ideas that we tried to communicate in this paper was that in a minor conflict and in the near term impact is actually going to be pretty low, so long as the global market expectation is that the conflict isn't going to escalate to a full-scale war. And in our view, in the short term, those expectations, rather than the physical disruptions to trade from this sort of minor conflict scenario, actually have the biggest impact. So specifically in this paper, we look at what the likely immediate disruptions to trade, FDI, and portfolio investment look like. And, the stakes are very high. There's been great work done at CSIS that has, documented that, about 1/5 of global maritime trade goes to the Taiwan Strait. In our paper, we assess, how, the well-known fact about how globally dependent we are on Taiwanese advanced chips. But if you look at each, in the short term about what exactly happens to global trade, the impacts don't accrue right away. On the point about the Taiwan Strait closing, there are other options. You can go around the Taiwan Strait. There will be disruptions to ports, certainly from warships having to dock in Busan or wherever. But the Taiwan Strait isn't a true choke point in the regard that there are no other options. Maybe the most disruptive impact comes from trade from Taiwan itself, right? And in the minor scenario, we envision a temporary blockade where nothing is coming in or out. But in our view, although this is tremendously disruptive, it takes time for these impacts to be felt. You think about a chip that's produced in Taiwan, that maybe it's an automotive chip. Maybe it's first sent from Taiwan to be packaged in Malaysia, then it gets sent to China, where it gets, put into an auto part, and then it gets sent to Europe to be manufactured in a final vehicle. At each stage, there's some inventory that you can burn through before you have to shut down production. So there's flex in the system where these impacts on employment and production don't happen right away. And moreover, so long as the disruption to supply is brief, some of our co-authors have written that, China almost certainly has the capacity to maintain social stability for a short period of time, despite furloughs or layoffs in important industries. But as soon as the expectation settles in that we're headed toward a full-scale U.S.-China conflict over Taiwan, then, in our view, the costs to China begin to rise very sharply. Banks begin to stop transacting with Chinese counterparties for fear of sanctions. Trade finance that underpins China's trade with the rest of the world begins to seize up. There's a rush to get money out of China, which probably forces stricter capital controls and may lead Beijing to even close the door on Hong Kong as a financial intermediary. And this switch in market perspective can happen very quickly and have irreversible effects on how the global economy interacts with China. So that's what we mean when we talk about this nonlinear impact that stems from perceptions about where this minor conflict is ultimately going to go.
Great. So another point that you make in the paper is you state that the longer that China's adversaries can extend a gray zone military engagement while denying Beijing its objectives, the greater the probability that economic interests will actually force China to back down. So why is that the case?
Right. And here I would emphasize we are far from military experts, and wouldn't recommend this as a course of, we understand what the right military strategy is here. That's not what we sort of bring to the table. Our point is, from an economic incentive perspective, the costs of any disruption to global trade will be severe on both sides, even in a gray zone scenario, on China's economy in particular, because of losing access to global exports, but also on the rest of the world for losing access to certain imports from China and critical manufactured goods as well. But our point is that, consistent with these sort of nonlinear costs, the more in which you extend that scenario of gray zone action or intermediate kind of conflict, the more political pressure it will put on Beijing. Because if we assume that Beijing was not committed to major war, they basically set into this action saying, we intend to send this signal and then back down, after that signal is sent and after we receive either a change in behavior on the other side. Our point is in the paper is that from an economic interest perspective, the rest of the world may be incentivized to try to deny China that fait accompli objective and to push back against it as long as possible, because the costs will accrue disproportionately to China. And they'll start to accumulate in nonlinear ways, as Charlie suggested, including via the exchange rate, for example. So if you start to see capital flight, weakness of the exchange rate, all of a sudden China's overseas purchasing power is substantially reduced. You're talking about, more significant crises of confidence in overall governance. And again, I think those economic forces start to limit if we assume that these political objectives are not absolute, that they're being weighed against some other consequences for China, that they are not, really, predetermined sort of options, then you'd assume that at some point the economists, the financial technocrats would start to enter the room and would be putting greater pressure on, the top leadership to sort of end this sooner rather than later.
So let's turn to talking a bit about the major war scenario. And of course, if the United States were to intervene and the Chinese military lands on Taiwan and we have a war that is prolonged, we know that the impact on the global economy would be massive. And in the other work you've done at Rhodium, you have really highlighted that. But of course, in this paper, we've asked you to focus on the impact on the Chinese economy and how that might affect Chinese decision-making. So obviously, your assessment, I very much agree with. Economic costs alone would be unlikely to deter China from using force against Taiwan if it already decided on that course of action that was necessary because perhaps Xi Jinping needed to act, because not doing so might weaken his position or even undermine Chinese Communist Party legitimacy. But you assert Beijing would know in advance that the impact on the Chinese economy would be catastrophic. And I was really curious as to what's behind your confidence that China knows that the impact would be catastrophic. Is there any possibility that Beijing would underestimate the costs?
I think Beijing would underestimate the costs because I'm not sure the costs are fairly calculable, so to speak. I think that any decision that Beijing would make to initiate military force would be essentially economic cost insensitive. In other words, even if you ratcheted up this catastrophic impact to a higher level, I'm not sure what it would, if that would change that scenario. And that's sort of, if that would change their decision-making process. So it's probably fair to say that those would be underestimated, in part because the global economy is structured as China runs a very large trade surplus. The rest of the world, the G7 in particular, runs a very large trade deficit. The two sides cannot finance one another independently. So you cannot find sources of demand if you're China outside of the G7. You cannot find sources of supply or sources of exports outside of China if you are the G7. And so the disruptions to global trade would be immediate, and that's just based on the structure of the global economy. It's a very debatable prospect whether it is easier for China to reconstitute sources of demand versus the rest of the world reconstituting sources of supply under such a disruption. I think Beijing would underestimate that cost that would be necessary to recreate sources of demand, which are not evident at all. So I think there are miscalculations that are intrinsic to this process. But I guess my assumption is that as an economist, we can talk about extremely large economic numbers of potential losses of global output, but those probably aren't being considered deeply in Beijing. My own experience living through Beijing's reaction to the Hong Kong protests and all of this discussion in 2019 and 2020 about, well, there's no way Beijing can do X because of the impact on Hong Kong. And, most of the evidence at that time was that economic considerations didn't really enter into how Beijing was thinking, even about a major, asset that they had in terms of the global financial system. So that's part of it implicit within this expectation. The other issue is that the costs are nonlinear, precisely as Charlie mentioned. Upon the initiation of a conflict that the financial markets thought would be extended or prolonged, you would likely have a very significant exchange rate adjustment in the renminbi dollar rate, which would significantly weaken Beijing's overseas purchasing power. You would have essentially debates in the global economy about embargoes and how effectively embargoes could be enforced or broken. Those would be the new variables. And frankly, we don't have much data on that, on how that would actually work. I'm sure that there are simulations therein that have been done on how that might work. But China has this impression that they can build a fortress economy, and that if they continue to insulate themselves from foreign imports for critical technologies, for example, that they can develop a certain degree of flexibility. And I think it's really just a myth. It's never really going to, their vulnerabilities are more on the demand side in terms of finding overseas markets for many of their manufactured products. And just because certain components of inputs into Chinese technologies and critical imported components are necessary today, it can be different components tomorrow, and different sort of inputs can be targeted via embargoes or other trade restrictions in the event of a more protracted or extended conflict. So that's sort of where the economics would revert to, is over the effectiveness of those tools. How effectively could Beijing circumvent sanctions and embargoes? How effectively could the U.S. and its allies and partners enforce sanctions and embargoes? And frankly, I think those costs can be underestimated because they're still very unknowable.
One of the other things, if I can throw in here, Bonnie, one of the other things that I think falls out from this is that we make the point that because the economic costs to China in a minor conflict scenario are non-trivial but manageable, the costs to Taiwan are not. Taiwan has, according to some estimates, maybe less than 2 weeks of natural gas stockpile available. And our point here is that China can certainly withstand the economic impacts from 2 weeks of blockade against Taiwan. And for that matter, probably the rest of the global economy can too, that we won't start to see systematic shortages of goods containing chips for maybe weeks many weeks after a conflict like this begins. And that creates an opportunity for Beijing to put a lot of pressure on Taiwan in the immediate term, and maybe force some sort of political concessions from Taiwan before the international community bears the pain of this blockade in a way that would mobilize or catalyze an economic statecraft response or a major sanctions response against China. And so, facing what are incalculable but likely very high costs from a major war scenario, that creates a strong incentive for Beijing to force a fait accompli through one of these gray zone scenarios.
Can you briefly talk about what policy tools are available to Beijing for economic stabilization or recovery during and after a crisis, and what are the limitations of these tools?
Sure. I mean, I think that they have plenty of tools from the central bank to provide emergency liquidity, have done so in the event of more minor instances of financial stress that have occurred onshore in onshore markets already. The gap here is in any external linkage to the rest of the global economy. So China can intervene to stabilize their exchange rate by selling dollars up to a point. but their actual coverage of their foreign exchange reserves relative to the domestic money supply is at an all-time low. It's about 7% of foreign exchange reserves relative to the domestic money supply. This is well below levels at which during the Asian financial crisis, other economies broke their dollar pegs at that point. It's not that Beijing couldn't defend their currency for a while. They would likely try to shut down capital outflows more broadly in order to do so. But that's a battle in terms of where you choose to allow some depreciation and where you choose to come into the market and say, we're going to defend the renminbi at, say, 10% below its current level. And we can do that indefinitely because that's credible. It's a test of credibility to your own, public in terms of where they're trying to sell renminbi and move into dollars or other assets and where they're not. So there's a test there to how you could do that. There's all sorts of guarantees that can be provided to ensure that certain companies remain in business. If exporters, go out of business because they're losing overseas demand, state resources can step in with fiscal resources and buy product and accumulate it. That's probably not a strategy that will work indefinitely, but it can certainly buy some time. So there's all sorts of emergency facilities that can be unlocked. It will not be a question of state capacity to respond. It will be a question of the effectiveness of those responses over time and what they can replace and what they can't. You can't replace $3.5 trillion in global export demand. It's not possible. That's where immediately that impact will start to be felt through the exchange rate itself. But Beijing can deploy a few lifeboats and can decide who gets in them for certain.
One of the really interesting points that you make in this paper, which I found a bit surprising, is that you conclude that China will probably face longer-lasting economic effects from accelerated global de-risking, even if the conflict is a minor one in the scenario that we posit, which is really limited casualties for China and Taiwan and only lasting a couple of weeks. So why is that the case? And what are the longer term economic consequences that you foresee?
Yeah. So I think there are two takeaways that people will have after an event like this. One is that this is a validation of the idea that a protracted war between China and Taiwan is so costly that no one is willing to bear these costs, and the de-escalation is inevitable. The second possible takeaway is that, for the first time in many decades, China demonstrated a willingness to start a war that resulted in substantial casualties on both sides, and it could happen again in the future. Now, depending on sort of which of those takeaways you come away with from the scenario is going to determine how you approach the Chinese market going forward. And I think our view is that if you asked CEOs who are being asked to, put forward decade-long investment decisions in China or make long-lasting relationships for the sourcing of critical inputs to their product, they'll look at a situation in which China and Taiwan nearly came to major blows as a sign that it's time to accelerate de-risking. And that's what's driving our view that after a situation like this, American businesses, global businesses are going to be looking towards alternatives with even more urgency than they are right now.
So one last question. Of course, the four papers are in many ways interrelated, and economic costs are potentially connected to social instability in China. And of course, I talked separately with the authors of the paper on social instability, Sheeta Greitens and Jake Rinaldi. But from the perspective of your economic backgrounds, I think Chinese leaders would be concerned that if there are massive economic costs, that it could trigger instability. But do you think this would be a major factor in China's decision making?
I think it would be, I doubt it would be a major factor in China's decision making. On the one hand, I think Sheena and Jake's paper is outstanding in terms of walking through the reaction to zero COVID and some of the, the follow-on consequences for social stability that have resulted from that. And if you think about zero COVID, it really is hard to say. I forecast that a rise in unemployment, rural unemployment, or a decline in incomes is going to have that kind of an impact on social instability relative to locking people in their homes and seeing that sort of a reaction that we saw in 2022. So economic analysis can only go so far here, but there's no question there would be significant implications. The way we kind of explain it often at Rhodium is that decay is the process that you're seeing at the Chinese local level in terms of the fiscal and financial system. You're not seeing crisis or collapse. You're seeing an ongoing kind of decay in the capacity of the state and its traditional levers to push back against cyclical weakness and to maintain a certain level of public goods and social welfare. And an erosion of the fiscal and financial systems is consistent with that. Military conflict and a decision to initiate military conflict is probably not going to be made based on the concern is that the decay will get worse, so to speak. And yet that is the likely implication, is that you will continue to try to mitigate some sharp disruption in social or economic stability simply by doing some of the same things you have, prolonging, continuing to keep certain assets guaranteed, prolonging immediate costs. That's sort of what we would generally expect. So very much defer to our colleagues who are much better analysts of social stability and domestic Chinese affairs than what we've offered here.
So we've been talking with Logan Wright and Charlie Vest. They both work at the Rhodium Group. Their paper is a contribution to a study that GMF has released recently, and it's called If China Attacks Taiwan. Thank you so much for being on their China Global podcast.
Thanks, Bonnie.
Thank you, Bonnie.